Hello, everyone. Welcome to today's special presentation on building blocks to drive growth and value, a strategic evolution for finance leaders. My name is Angela Tice. I'm the National Membership Chair and the Northeast Regional Director, and I'll be facilitating today's session. So I just want to do a little bit of housekeeping before we actually get started. Your lines are muted, and that's really so that there are no distractions. We certainly encourage your questions and your comments for today's discussion. So please feel free to type your question in the questions area, and I'll make sure to ask your questions on your behalf. I'll be monitoring that area and certainly will address your concerns as I see them come in. If you are a member of the CFO Leadership Council, you will receive one CPE for today's webcast. Now, to receive credit, you must be a current member and answer 4 of the polling questions that we ask you today. We'll interrupt the discussion and bring those to you and give you a chance to answer. In order to answer the polling questions effectively, you must be logged into today's session. So if you've dialed in and you want to receive CPE, you need to hang up and use the direct link provided to you at registration. So in other words, you need to be on a computer in order to get your CPE. For almost a year now, the CFOLC has pivoted to help support our community by keeping you as connected as possible. And we really hope that you're going to take advantage of all of the virtual programs across the chapters and nationally, like today's discussion, so that you can really stay connected with us and with all of your peers across the nation. A full list of the programs can be found on our website, and CPEs are offered for current CFOLC members. So really easy way to get your CPEs packed on. If you're a guest today and you're wondering how to become a member of the CFO Leadership Council, you can certainly connect with me after the webcast. We do have 2 different levels of involvement, and membership does start the day you join. The cool thing about that is that if you are not a member today and you join today and you want to get CPE, you would actually get CPE for today's session. So finally, I just want to mention that most of our webcasts and virtual discussions are recorded so that our members can check in and either listen again or listen to ones that you might have missed. At this time, we don't offer CPE when listening to the recordings, but there's just so much great information up there. So we really do hope that you go up and listen to others that have been done before this one. And while you're in that membership portal, don't forget to look up our partner experts like Tipalti. Many of them have virtual offices where you can visit and find excellent information in a vast amount of areas. And you can actually reach out to them directly if you have specific questions or needs. And I really appreciate our partners throughout all of this time, because boy, the information that is just shared and given is just phenomenal. So thank you to our partners. If you do have any questions about how to find that information, you can certainly reach out to our National Sponsor Relations Manager, Katie Todd, or your local marketing director. That person is always knowing everything there is to know about your membership. So you can certainly do that, and they can certainly help you navigate through. So that's really it for the housekeeping that I wanted to offer out to all of you today, and some information. So now it's really my pleasure to introduce our speakers. First, we have Mark Brousseau, President of Brousseau & Associates. Over the past 26 years, Mark has established himself as a thought leader on accounts payable, accounts receivable, payments, and document automation. A popular speaker at industry conferences and on webinars and podcasts, Mark advises prominent end users and solutions and service providers on how to use automation to improve document and payments-driven business processes. Mark has chaired numerous educational conferences and served on several industry committees and boards. Joining Mark today is Derek Chang. He's a Senior Director of Corporate Marketing at Tipalti. And Derek leads the development of content at Tipalti and is the co-host of the Business Finance Friends podcast. He's authored multiple white papers and articles in the areas of finance operations and is an avid technologist for back office processes, spanning a career of over 25 years. So I just want to say thank you to both of you for joining us today and sharing your knowledge and your expertise with our members. I really appreciate that. And Mark, with that, I'm going to hand it off to you so you can start sharing your expertise.
Hey, thank you so much for the warm introduction, Angela, and thank you all for joining us today. I also want to thank today's sponsor of today's webinar, Tipalti. So there's no question that these have been tumultuous times for CFOs and the finance teams that they lead. But the bad news is that your hardest part may lie ahead, and that's helping guide your business to return to growth. CFOs and their teams, well, they're going to play a big part in how successful your business is in driving revenues and growth. During today's webinar, we're going to explain why antiquated approaches to financial decision making, they simply aren't going to be enough if you want your business to seize upon the recovery that we hope is coming soon. We're going to show you how real-time financial data helps CFOs and other finance leaders move from being reactive to proactive. We'll provide you with strategies for creating a growth and value-driven finance function. And we're going to leave you with an action plan for modernizing and future-proofing your finance function. But before we do all that, we wanted to start with a poll question, which is about to be displayed on your screen. We want to know, which of the following is your finance department's top priority for improvement this year? Is it automating more? Is it improving your data analysis? Is it becoming more scalable? Or is it driving revenue growth? Take a moment to respond to the poll question now displayed in your screen, and we'll discuss the results in just a moment. So Derek, when you're talking to finance leaders, what is it that's at the top of their mind these days?
I think honestly, it's probably all of those things to some extent. And you know, as we're in this pandemic, it's all kind of accelerated, right? I think it's the need for all those things to survive and thrive as a company, to come out of the pandemic ahead of the game. I think all those on top are top of mind for senior finance people right now.
There's no question that a lot of organizations have spent the past year surviving, if you will, just trying to make sense of it all. Are many businesses now starting to look ahead, to start thinking about how it is they can drive revenue growth?
Totally. I think that the business does not stop as much as you might think it might. You don't want it to stop. Your investors don't want it to stop. Certainly your employees don't. This is a time to kind of button down and try and really make your space in your industry.
Well, proving once again, Derek, that you have your thumb firmly on the pulse of the finance industry, what we found is the plurality of folks on the line are indeed focused on driving revenue growth. They're also looking for ways to improve their data analysis, which no doubt contributes to that, and to automate further. Does any of this surprise you, Derek?
No, and you know, I don't want to second guess our really intelligent audience. Scalability, I think maybe people think of it as a type of growth, but actually it's about flexibility. It's about having the ability to move quickly, to be productive. So scalability is much broader than I think what folks are thinking.
So as we're looking ahead to 2021, the chances are that your role as a finance leader is changing. And that probably started long before the pandemic. The modern CFO and other finance leaders, well, they're breaking traditional boundaries of their finance-based role. They're making decisions for the company at large. And many of those are strategic decisions. 81% of CFOs see identifying and targeting areas of new value as one of their primary responsibilities. So if you were one of the folks who identified driving revenue growth as a top priority for this year, you're not alone. 77% of CFOs believe it's within their duties to drive business-wide operational transformation. We're seeing more CFOs get more and more involved in digital transformation initiatives. This is no surprise. Today's CFOs are expected to go far beyond traditional accounting responsibilities to help drive the company's direction. Today, if you're a CFO or finance leader, you might be responsible for improving business performance visibility, conducting business analysis, fundraising, trying to drive productivity and scalability, enhancing cash controls. That's not to say that CFOs don't have to deal with the residue of our past. In many finance departments, manual processes still stand in the way of CFOs fulfilling these strategic activities that Derek and I were just speaking of. Manual financial operations hold your finance team back. It consumes the time and the resources necessary to achieve the strategic functions that you're really focused on. Now, let's not make any mistake about it. CFOs recognize the limitations of these manual processes in their finance department. And that's why more CFOs and finance teams are using digital tools to automate routine tasks and free up time for higher value initiatives, things like data analysis. Once information is digitized and it's accessible, well, now finance leaders and their finance teams can use data to help organizations make more strategic and informed decisions around growth. Digitization also enables AP departments to grow without having to hire additional staff. So if you're successful in achieving that revenue growth that you identify as a top priority, you won't have to worry about building out a staff to support it. And finally, CFOs and finance can empower other functions and drive revenue at an enterprise level. When you take advantage of technology, you're able to take on the responsibilities of paving an efficient and informed direction for your organization. Now, none of this is to say that every CFO and every finance leader has embraced automation. And there's really 5 big reasons that some of you are dragging your feet on automating your finance department. Well, first, you might worry that your people will never use the new technology. And this is really a change management issue. Just because you've been doing something the exact same way for a long time doesn't mean it's the right way, no matter what my mother-in-law says. It also might be difficult for finance leaders to comprehend the value for something that they haven't experienced. Conceptually, yeah, I know the idea of paying for technology that does what a person can do, that might seem unnecessary to some of you. But automation eliminates the need to continually add, vet, and train finance staff. And that's critical if you want to achieve scalability and growth. And of course, some CFOs and finance leaders may be skeptical of some systems and technologies. And in your defense, well, I get it. Some technology providers make promises they simply can't keep. And CFOs and finance leaders can overcome this concern by taking time to understand whether a system or a technology will meet their needs, to dive deeper into the technology. And many of you are doing that. Some finance leaders have an incomplete understanding of what technology is. And the fact is, finance technology is constantly evolving, so stay tuned. And finally, some CFOs may get distracted by their daily routine, too distracted to automate, they say. Don't get distracted, because the risks of failing to modernize are really, really high. More than 70% of you know that. More than 70% of CFOs feel that their executive team's increasing demands could be particularly challenging to address unless they automate. 1/3 of CFOs see risk in the lack of automation or slow implementation of new financial technology. And it's for these reasons that technology, automation, is a top of mind issue for more and more CFOs. And I'm not talking about the latest tools for creating pivot tables here. And that brings us to our next poll question, which is about to be displayed on your screen. This time we want to know, how would you describe your finance department's current level of automation? Are you fully automated? Are you largely automated with no plans to upgrade? Are you largely automated, but you have plans to upgrade? Are you partially automated with no plans to upgrade? Are you partially automated with plans to upgrade? Or are you not automated? You are a paper pusher. Take a moment to respond to the poll question now displayed on your screen. And we'll discuss the results in just a moment. So Derek, when you walk into finance departments, what do you typically see? Where are they typically on the automation continuum?
I think it depends on their stage of growth. If they are active, they're what we call high velocity, they tend to veer towards more automated systems as much as possible. They don't want to hire more headcount to support those functions. Why pay people to pay people, if you will? So yeah, I think we tend to work with higher velocity companies.
My guess is that most folks are somewhere in the middle, right? They're semi-automated. They've done something around automation, but they probably aren't in nirvana yet, an electronic environment. I would argue that semi-automation probably isn't going to be enough in the future. Would you agree with that, Derek?
Totally. I think as AI and some of the new technologies come into play, there's just going to be more opportunity to upskill your staff, get them out of the drudgery of kind of the manual parts of finance and focus on more of the instrumental valued parts.
Thankfully, it looks like none of our attendees today are operating in a paper pushing mode. I hope I didn't jade any of you. It looks like most of you are somewhere in that great middle. You're partially automated or largely automated. But look at this, Derek. A lot of the folks who describe themselves as partially or largely automated, they have plans to upgrade. What does that tell you?
I think last year shook everybody up. We had situation. I think there was one anecdote we got from a customer where the controller literally drove invoices. I'm sorry, drove checks around to her CFO so that they could sign them, and then socially distant, and then come back, pick up the checks the day after, get it all mailed out. And I think that was enough pain for them to realize they needed to do something different.
What could possibly go wrong by leaving a bag of checks on a CFO's doorstep to be signed? Well, beyond finance, automation is dramatically changing the way that companies do business. Derek just alluded to it. As a result, millions of workers, young and old, might be displaced from their jobs over time. And with this trend in mind, well, it's important to explore the current state of automation in our finance function, our own backyards. Now more than ever, finance leaders must step up to guide their companies to sustainable success. And to do that, they're going to need to automate. CFOs need to make sure they have the right processes in place before things reach a point where operational performance or cash flow or spend management are negatively hindered. Automation frees your finance staff to focus on strategy, not just making sure the day-to-day tasks are handled. Among forward-looking CFOs who have already automated at least some of their finance processes, 55% of them have eliminated 40% or more of the time their teams previously needed to spend on manual finance processes. That's staggering. Many CFOs say their organization also has improved the experience for internal stakeholders as well as their suppliers. Everyone is happier when your finance team automates. Using automation to make finance processes faster and less labor intensive, well, it allows your teams to spend more time on strategic work like forecasting, which is a real burden in times like these, as well as cost controls, a top priority for businesses. As a result, finance can have a bigger impact on the organization. You too can have a parking spot in front of the building whenever you get to return to the building. 62% of CFOs say that they're going to switch the focus of those employees that currently handle manual tasks that can be automated to higher value work. So we're not talking about a bloodletting here. We're talking about refocusing folks to more fulfilling jobs. And this is one of the key results of automation. And if a job is eliminated by automation, 77% of respondents say they plan to transfer those workers to a different department. But we know that not everyone can do more without additional training. And many CFOs are aware of that. 50% of CFOs say they would retrain workers with new skills, allowing them to circumvent any displacement concerns brought about by automation, freeing staff to focus on more time on strategic activities That's critical here, folks. It's key when you want to achieve growth and value. Consider this stat. The AI built to scale study by Accenture suggests that failure to scale AI could put as many as 75% of organizations out of business. The stakes couldn't possibly be higher. So the question becomes, where do I focus my energies when it comes to automation? Well, Derek and I would argue that accounts payable is one area that CFOs and finance leaders ought to be focused on. Now, I know what you're thinking. I know what you're thinking. Accounts payable probably isn't the first function you think of when someone mentions strategic initiatives that drive growth and value. But here's the thing. A modern accounts payable department can be just what you need to accomplish greater revenues and growth. But to do that, CFOs must automate. Accounts payable today is the most time-consuming function in a finance department. So automating it is essential when you start looking for ways to drive revenues and growth. In accounts payable, there's a lot of interdependent tasks that go into getting a supplier paid. You need to onboard suppliers and keep the vendor master file up to date, stay in compliance with tax regulations, keep track of approvals for invoices, deal with currency conversion for global payments, communicate with suppliers about payment statuses, reconcile payments. Whew, the list goes on and on. Not only are all these manual tasks inefficient, they also add risk to the process, risk of human error, risk of being out of compliance, risk of failing an audit, and risk of hefty fines and penalties. And here's the thing, size further complicates matters for many businesses. Finance challenges become bigger as you grow. And today we all know that complicated global and M&A business structures, well, they're the norm. There are plenty of companies with international divisions and acquisitions and subsidiaries, brands and entities. And many of these companies have disparate finance processes that they must manage, like the company structure pictured on this slide. Now, some might think that what they've done in the UK will be enough for all of Europe, but with the dynamics of the EU changing, you can't expect the UK to be an adequate solution for all of Europe. And this goes on across geographies. So what is it that your financial processes look like when you become a truly global company? Well, in a nutshell, they're a nightmare. Businesses with multiple entities have many different systems to integrate, complex processes to try and navigate, and far-flung finance teams working in each entity. Just think about all the time and effort just to pay suppliers for each of these entities. Long before you even get to making a payment, you've got to figure out ways to collect, validate, and track banking information and tax forms for all the suppliers you have in all the entities that you have. Think about all the resources required to make payments in local currency, logging into multiple bank portals and managing all those banking relationships. Think of all the payments that must be reconciled in the hundreds of spreadsheets to do it at the entity level. And then you got to do it all over again at the headquarters level. And many companies don't have complete integration from each of their entities up to headquarters to roll up values for financial reporting and to close the books. So generating reports and seeing total values across entities, well, you're probably doing that manually, and that's time consuming, and it exposes you to lots and lots of risk. AR departments waste lots and lots of time on the types of activities I just described. Nearly half of CFOs say their finance teams spend 5 to 10 people hours every week on AP related tasks. That's a lot of time. And these manual tasks include really mundane things like invoice processing and responding to supplier inquiries and making payments, oftentimes printing checks and signing them, matching invoices to POs. All told, up to 520 hours are dedicated to these tasks every year. Think about what your finance team could do with an extra 520 hours every year. Over 1/4 of businesses, they're dedicating 10 to 20 people hours per week to AP tasks. Now we're talking about more than 1,000 hours every year. Now think about what you can accomplish with that time. Only 4% of all the businesses surveyed said their team spends less than 3 hours per week on AP related tasks. All of this, my friends, highlights the need for AP automation. And it's not just time that you lose when you process AP tasks manually. You're also losing some real money. According to the US Bureau of Labor Statistics, hourly earnings averaged $29.37 this past June. Thus, tasks like invoice management, bill processing, and payment reconciliation, well, they could be costing your business anywhere between $15,000 and $30,000 every year per FTE you have dedicated to these tasks. Now think about what you can do with all that money you save. It's critical. It's critical that finance departments take a big picture approach to AP automation. Often the value of AP automation, well, it's reduced to just the ability to save costs or save time. But AP technology reaches far beyond electronifying all that paper pushing that you currently do. Most organizations see big improvements in efficiency and control and processing times and visibility. This is music to a finance leader's ears at times like this. But they can also unite back office departments and processes so that now stakeholders across your organization can leverage the information that flows through AP. If this is enticing to you, you're not alone. And that brings us to our next poll question, which is about to be displayed on your screen. This time we want to know, which of the following is the most compelling benefit of AP automation in your mind? Is it better supplier management? Is it streamlined tax and regulatory compliance? Is it easier invoice management and reconciliation? Or is it more cost-effective global payments? Take a moment to respond to the poll question now displayed on your screen. And we'll discuss the results in just a moment. Derek, there really has been a sea change in the way that finance leaders look at AP automation. For years, it was all about cost cutting, but now finance leaders are taking a more strategic approach to AP automation. Talk to me about what it is they hope to achieve by automating AP from a strategic perspective.
I think that it has a lot to do with just getting out of manual processes, improving their financial controls, being able to account for everything that they're sending out. So, that's critical. And then also as supply chains become more relevant to the general operation of the business, being able to pay your suppliers quickly, easily, I think that goes into those relationships.
Someone listening in right now might be saying to themselves, listen, I know my AP process is not ideal, but boy, we have a lot of competing priorities in finance. Why is it that AP automation should be the top priority for automation, Derek?
I think because it's been neglected so long. That's just, no one really wants to do this job. I hope no one wants to do this job. I think if you start hiring, Zoomers and millennials, they're not going to want to do this job either. So we're looking at a sea change in terms of what's expected when you get into a finance organization. I see the results. I'm not surprised by the results. I think nobody really wants to deal with invoices, and that's certainly a big chunk of it. But what do you do after you solve for invoices? There's a lot more there, and I think that's something to consider.
Yeah, and once you've solved for your invoice processing, now you're able to move on to some really big benefits, transformative benefits, if you will. And it all starts with supplier management, on-demand, self-service supplier portals. They accelerate your supplier onboarding no matter where your staff works. It mitigates payment errors, and it improves communications between your stakeholders as well as your suppliers. And all of this significantly reduces supplier inquiries coming into your already burdened staff. It also strengthens your supplier relationships. You get off on a good foot with your suppliers, and you have a relationship that is made stronger by the way you manage your suppliers. Automation also makes it easier for AP departments to manage and reconcile their invoices. Paper invoices are converted to an electronic format, either through OCR data capture or by leveraging e-invoicing. And in an automated environment, far more invoices are posted directly to your ERP or your accounting system without anyone ever having to touch them. That's exactly what a Zoomer or a Gen Xer is looking for. And in cases where there is an exception or an invoice that requires review, well, now digital workflows route them based on preset business rules. No more manila inner office envelopes, no more emails that get wiped out at the end of the week by somebody who just wants a clean email box on Monday morning. Automated accounts payable solutions also reconcile invoices in real time. Automation also assists AP departments, tax and regulatory compliance. It gathers the right tax forms and tax information from your suppliers before a payment is made. So there's no more chasing down suppliers at the end of the year. Automation also ensures that payees provide the correct documents, and it validates the forms and the information for accuracy and completeness. And it calculates tax withholding when you need it to. And finally, AP automation provides a single platform for multi-entity companies to do business globally. This makes paying your suppliers across the globe a breeze. So if you find these benefits compelling, you're not alone. But you might be wondering, how is it that your finance department can build a tech stack that can deliver these types of transformative benefits? Well, the ultimate tech stack, if you will, varies depending on a business's maturity, its core strategic priorities, and the organization and the business model's complexity. You must also consider where your business aims to be in a year or two. These should be foundational technologies that you're not going to have to replace for a while. You don't want to be changing your processes every year as you grow. Plus, there's other factors to consider, like global expansion and multi-subsidiary structure and the number of international suppliers you have. You also want to be sure to focus your efforts on the most time-consuming finance functions, things like accounts payable. But although these are the finance tech stack's main components, that doesn't mean you should stop there. You should also be thinking about your most significant issues. What are your current problems in your business? What are you looking to rectify? To find the right technology, consider what to fix currently and what to fix in the future. And that is where you're going to find the best results. You also want to ensure that prospective technology solutions provide certain capabilities. And the most crucial aspect to consider when evaluating technology today is accessibility. I probably don't have to say more. You also want to be sure it has a modern infrastructure. It's available 24/7 and is 100% cloud-based. That there's AI and machine learning built in to eliminate manual repetitive tasks. You also want to know whether the solution has robust global capabilities. You're going to have employees all around the world. You're going to need real-time visibility to scale effectively. It's also essential to find solutions that integrate with solutions that you're already using. An ERP is probably first and foremost amongst those. You want to make sure that it can integrate with your ERP to provide you with 360-degree visibility into what's going on. Because It's important that the right tech stack put cash controls and insights at your finance team's fingertips. Real-time data around crucial business metrics informs and accelerates decision making in good times as well as bad. You can use the accounts payable data that a solution can provide, for instance, to quickly model financial plans to reflect changing scenarios. Real-time visibility into all your supplier expenses also helps senior management stay on top of costs. Many of us are looking for ways to tighten our belts, but we simply don't know where we're spending our money and with who. So we don't know where to begin. Payment terms also can be rationalized to free up cash for investments, to pay down debt, to avoid costly borrowing. And financing enables your suppliers to get paid faster without negatively impacting your balance sheet. These are all critical considerations, but they're not possible unless you have a modern AP department with modern technology. And when it comes to accounts payable, your tech stack needs to include several things. First of all, it needs to be 100% cloud architecture. It needs to have digital workflows. It needs to be able to make payments electronically. After all we've been through in the past year, you're not really going to keep paying suppliers with checks, are you? It also needs to have consolidated visibility, real-time integrations, and the ability to support staff, whether they work across town or they work across the globe. It's also important that your AP solution eliminate all those manual tasks that we've been speaking of during today's webinar. With a solution like Tipalti's, well, staff only need to intervene when absolutely necessary. This frees your team from time-consuming tasks such as keying invoice data, shuffling paper, and chasing down information. And this means your staff can focus on higher value activities, the things that drive growth and value, things like data analysis and supplier management and cleaning up your filthy vendor master database. And the result? Well, the result of all of this is a process that can scale along with your business. And the perfect AP tech stack should also incorporate strong financial controls that help prevent fraud and tax and regulatory and audit risk. Regularly evaluating financial processes, I know they help you uncover potential vulnerabilities. But modern technology takes it to the next level. It helps you maintain strong controls. Things like multi-factor authentication, IP restrictions, data protection, encryption, roles-based security, and audit trails. All of this is critical for maintaining security in today's high-risk environment. And then when you implement KPMG certified tax compliance and EU, US Privacy Shield protection, that's going to help you avoid non-compliance penalties. And then you can screen for OFAC to identify bad actors and make sure you're doing business with the types of companies you should be. Best-in-class AP departments, they already know all this. They've already taken steps to deploy the perfect AP tech stack. They're already ditching paper processes, eliminating manual tests, enhancing decision-making, and strengthening supplier relationships. 64% of businesses are trying to invest and grow to reposition themselves for the recovery. The perfect tech stack is helping best-in-class businesses get a leg up. You need to catch up because the right tech stack addresses not only your short-term requirements of getting suppliers paid in these tumultuous times, it puts you in a better position to achieve longer-term strategic priorities, things like revenue growth. This perfect tech stack can maximize efficiency, accelerate visibility, enable adaptability, and help you institute smart controls. Now, I know that you might be skeptical that this is the time to be investing in automation. You might argue that now is the time to invest in liquidity and cash flow, not AP automation. And I get it. There's no question that a strong cash position is critical to your survival at times like these. But hear me out. The right tech stack can deliver those productivity improvements while strengthening your cost and working capital controls. You can have your cake and you can eat it too. And modern automated solutions can be up and running fast with minimal upfront cost and with no disruption to your existing processes. That means it's a quick win for your finance department. And that's the message I want to leave you with today. If you want to help your business achieve strong growth and value, you have to modernize your finance function. And the strategies that we've outlined today will provide you with the building blocks to do just that. Now, you might be wondering, where do I start? How do I get going with these building blocks? Well, to help you with that, I'm going to hand it off to Derek. Derek?
Thank you, Mark. Actually, can you go back to the first slide again? Sorry. And thank you, CFO LC, this opportunity. I feel like celebrating. We really should be celebrating an era like this because the finance organization is finally getting some technology love. And while we're all in this kind of black swan event working from home, our kids are going crazy and we're getting cabin fever, the silver lining is that the paperless finance department is no longer a wish, it's actually reality. Technology is modernizing finance operations and removing the gaps. This gives strategic, high-velocity finance teams what they need, the ability to scale, to up-level their teams, to remove financial risk, and to retire those checkbooks and bank fobs. Next slide. We love speaking at CFO LC events because it's a group that values big picture thinking. And I'm going to ask you to do that with Payables for a moment. Is there a finance leader out there who's not looking to optimize their headcount? You know, finance has to set the example for the organization around efficiency and accuracy. So do they choose to spend headcount on someone at an analyst level who can help with long-term planning and spend management, or do they use that headcount to hire like an AP clerk to key in invoices, get approvals, or make payment runs? Most people think of invoices when they think of payables, and agreed, it's a very painful process involving manual data entry and hunting down approvals. It's why people hear that when they hear the term accounts payable or AP automation, they think OCR. But even just a small slice of the payables, but just a small slice of the payables workflow, Topalti provides one holistic system that institutionalizes best practices around financial controls and at the most critical points in payables, when the invoices are actually approved and when money leaves your companies. Ours is a scalable system that removes the operational gaps and enables payables to quickly respond to change. We actually consistently remove 80% of that workload, and that includes reinforcing the processes with best practices around tax, regulatory, fraud detection. And because we actually manage the execution of those payments, we often find that we can accelerate reconciliation by over 25% directly into your ERP or accounting platform. So no more spreadsheet gymnastics or sheet du soleil, as I like to call it. You know, Topalti really is there to gear, it's technology that's geared towards solving those kind of problems. Next slide, please. We work with 1,000 companies, over 1,000. Many are likely brands you recognize. It's very cool to be listening to podcasts and then you hear an ad from one of our customers, kind of a source of pride for me. Essentially, since those customers stick with us, they stick with us at a very high retention rate. It becomes very foundational to what they do. Last fall, we closed, in the middle of a pandemic, we closed a $150 million round of funding and became a $2 billion company suddenly overnight. What the industry and our customers recognize is how vital we are to keeping the business running. Like an ERP or spreadsheet, payables automation is essentially at an infrastructure level. CFOs and controllers, they're using us to pay thousands of suppliers and partners worldwide in a matter of clicks, and then they're doing it very securely, accurately, and in a very auditable way. Sorry. And here's a cool fact: for our customers, fewer than 5% of the transactions are through paper check. And that's to very remote situations, very isolated situations. All other payment methods are electronic, which are pandemic proof, accurate, and auditable. So even in a pandemic, businesses have to keep looking ahead. Healthy businesses are using this opportunity to capture more market share. They might be expanding internationally, acquiring businesses, increasing the pace of their operations, or simply building more robust financial controls to protect against risk. They see payables as mission critical to keeping their businesses running, as well as thriving. So Tipalti really solves today's payables challenges today and readies you for tomorrow. Thank you for your time. Mark?
And that brings us to our next poll question, which is about to be displayed on your screen. This time we want to know whether you'd like to learn more about our session sponsor, Tipalti. Yes, please, or not at this time. And while they're responding to that, Angela, I think that brings us to our time for questions.
And perfect timing it is. So the question, and I know you've talked about it a little bit, but I just want to ask it the way that it's asked here because I totally get what he's asking. Why modernize versus outcome-driven outsourcing? So while automation provides great efficiencies, why do it all if the cost and results can be managed more effectively outside the firm? So what do you say to that?
Derek, you want to take the first crack at that?
I can try. Certainly outsourcing is a interesting model, but when you start to really integrate that data, being able to have it in-house, being able to have controls that way, I know that those are still human beings. You're still outsourcing to human beings, and those cost structures still exist. I don't think that changes anything other than you're just moving the money around to fix that. Where automation is different is about scale, it's about productivity, it's about getting more return on your investment. It changes things from that standpoint. I don't think outsourcing is necessarily the structure you take if you're looking to minimize your footprint. It's meant for kind of stopgap. I need something really fast, and somebody's just going to solve this problem for us. Versus when you bring in technology, it's much more strategic. It's geared towards an optimization mentality. It's geared towards controls and accuracy. There are outsourcing vendors out there that do payables, and I'm sure they're great. But at the same time, there's a lack of control. I can't tell you what that person's doing. I can't tell you, who they're hiring. So it's different for every company and what your needs are. But the argument shouldn't be around automation versus outsourcing. It should really be around productivity versus solving my problem for me.
I would argue that while outsourcing will help you eliminate some manual repetitive tasks, what you're able to achieve by deploying a modern AP automation solution is that, plus you're able to get the tools that allow you to achieve the strategic benefits around working capital optimization, better spend management, risk mitigation, and proactive analytics that you won't get through an outsourcing relationship.
And I'll add one more thing, because I think you touched on something, but this is software. Software improves. Software innovates. Software gets transformational as it goes along. 1 year down the road, it's completely different than 2 years down the road, 3 years down the road. It continues to evolve and learn and adapt and create new functionality. a human being can only do so much from that standpoint. So
I think that's great, and I would say that too. Giving your human beings the opportunity to use automation, I think there's the mistake factor, right? So with automation, there is no mistake factor. So I love the question, and I love the way that you answered that. So thank you very much for the question, and of course for your answers. Any other questions out there, audience? We do have a little bit of time. Well, yeah, no, I thought somebody had another question. You put the questions in the questions answer area if you have another question. I thought I saw something, but nothing came through. I'm always happy to give some time back. I don't know if you have any last remarks, but I will thank you both and thank the audience today for joining us. And audience, I really do hope that you receive some valuable and practicable information. I certainly know that if you'd like to continue today's discussion, I encourage you to reach out to Mark and Derek. I'm so sure that they would be happy to answer any in-depth questions that you might have. So with that, I think we're going to give back some time. Sometimes it's just a matter of considering what they've just heard, and there could be questions later on. And if you do have them, you can always reach out to me, and I'd be happy to bring those questions back to Mark and Derek as well. So
yeah, we love the. Sorry.
Go ahead.
Oh no, I just love I love getting the feedback. So definitely send us messages, and I can direct you to the right source if I don't have the answer.
That's great. Thank you, Derek. And so I'm going to say we're giving you back 9 minutes, so use them well. This does conclude this presentation on building blocks to drive growth and value, a strategic evolution for finance leaders. Stay safe and stay connected, everyone.
Thank you.